Hello and good morning in Europe. Good evening in United States. This is Ahura, Wednesday, February 16th. Sorry, I'm here to see what happened yesterday in the market, what is going on, and what should we expect for today. As you know, these days everything is about Russian and Ukrainian tensions and what the US and the NATO also doing as reactions. We know that the Joe Biden in the last days he was repeatedly telling that Wednesday on February 16, Russia going to attack the Ukraine, which is not happened at least so far. It didn't happen. In Ukraine right now it's 7 a.m. in the morning, and we don't see any activities in the borders or stuff. But anyway, we know what we know is the Russian. They told that they took some of their soldiers and armies back to their bases from the simulation that they had in Ukrainian borders. So far, we know that they're building up some hospitals, just like around the borders, in Ukrainian borders, which is not a good signal. However, Russia, they told that they are not going to attack the Ukraine and they don't have a plan for that. On the other hand, yesterday, as I mentioned yesterday morning, the Russian Duma had a meeting yesterday, and they are doing almost the same thing that they did back in 2018, Georgia. Georgia as not as U.S. a state, Georgia as a country under the south of the Russia. They accepted the Donetsk and Luhansk as independent countries or independent areas. If you remember 2014, almost same thing happened first in the first step with the Crimea, and then later they added the Crimea to officially they added to the Russian territories. But here, if you remember, back in 2008, they did almost the same thing in Georgia when they attacked the Georgia, but they didn't add Abkhazia and Ossetia to their territory. They just accepted them as independent areas. But later, they didn't add it officially, but practically, they have a Russian passport. They have a Russian citizen. I mean, the people that they are living there. They are going to probably do almost the same thing here in Ukraine as well. So therefore, Russia accepted that the Ukrainian they may not going to act to listen to the Russian. They are not going to help to the Russian. What they have to do, they are creating the wall how they want it. So therefore, the Donetsk and Luhansk are right now independent areas, independent countries as the Russian ones, and the Duma accepted it. And now all what we need to see is we just so far we can most probably just President Putin should sign this law, this order, and it's going to be a law. This order will be the law. Okay, this is what happened there, and this is kind of the tensions about the Russian and Ukrainian. However, the market worries and concerns decrease a little bit ease, and that's why we can see that here in the VIX chart, as you can see here, the numbers are lowered, but still we are at the high levels. You can see here, yeah, the market risk, the level of the risk is decreased a little bit, but still it is high. But on the economic data front, today is very important day. Let's first review what we had yesterday. Yesterday also we had really important data. The most important data started from Japan with the GDP. Japanese GDP increased 1.3% in the fourth quarter, which is a little bit lower, 0.1% lower than expectations, but it is way above minus 0.9% of expectations of earlier data, initial expectation, actually we can say, which it means that the economy in Japan is increasing very well, and we should not that much worry. But even if it's slower than expectations, a little bit slower than expectation, but it is amazingly improving. Then we had British employment data. Unemployment level in United Kingdom stayed unchanged at 4.1%, which is amazing. But the worrying number was on average earnings, which increased by 4.3%, which is like more than 3% of expectation, 3% of usual. I mean, in a normal situation, 4.3%. It means that we're gonna have more inflation in the market in the next months, and most probably it's gonna support the idea of increasing another 0.25% rate hike of BOE in the next meeting. Later, then in Germany, we had German ZEW economic sentiment, and it was less than expectations at 54.3, but way better than previous month at 51.7. So it means that the economy in Germany also is improving, even if it's slower than expectations, but it is improving. It's not decreasing it's not lowering from the previous months. It's increasing from the previous months, but a little bit slower than expectations. Then we had a GDP from Eurozone. Eurozone GDP at 4.6% was in line with with the initial expectations, initial guess and expectations at 4.6%. So we didn't have a surprise there. Later in the United States, we had housing data. In Canada, we had housing starts, which it was lower than expectations, and finally in the United States, we had producer inflation. Producer inflation, or PPI, it showed that it was 1% increase in January. After November and December decreasing inflation, producer inflation, we could see another rate. Actually, not November. In December, we had producer inflation decreasing, and again in November we can see that it is increasing, and it is not a good sign for the market. Most probably because of improving average earnings and improving the salaries, and also improving the energy prices. We saw that as we know that in January, again oil prices was increasing. So therefore, January was that was another reason to be a little bit worried. But President Biden's speech also didn't change anything in the market. He didn't say anything specific or anything important that can change the financial market. Maybe the political stuff, but the financial market did change nothing. The market also didn't take serious his speech last night. Serious. Later, we had the American Petroleum Institute weekly report. Energy, I mean, the oil and the gas inventories almost didn't change. It almost was in line with expectation at decreasing 1,700,000. Almost one. Actually, we were no. It was much. Sorry. Yeah. Sorry. Let me go. Yeah, the market was expecting 1.70, almost 7 million barrels decrease, but it was almost 1 million decrease we had in the market. So so the inventories in the United States decreased much less than expectation, which is a negative sign for the oil price, which it means that the inventory levels are fine. When market was expecting to decrease that much, 1.77 million barrels, it increased 1 million barrels that much. So it means that the inventory levels is better than expectations. Today we're gonna have EIA weekly report, Energy Administration, U.S. Energy Administration data. We have EIA data today. Later, then we're gonna know better what is going on in the U.S. Market. So oil market, or generally the energy market. And then earlier today also we had Chinese inflation numbers. We had both consumer and producers inflation. CPI in China increased again. Inflation in January increased by I'm saying the January in a monthly and a yearly basis to understand what's going on. In a monthly base, increased by 0.4%. In monthly scale, 0.4% just in January, while months ago it was decreasing by minus 0.3%. Market was expecting 0.5% increase, but it increased less than expectation. But it is still higher. The speed is higher than December, which is not a good sign. But in annual scale, it fell to 0.9% from 1.5% of last year. So in annual scale, we can see that inflation is decreasing. Same as the producer inflation. The producer inflation was very lower than expectation. 10.3% was for the last month. The producer inflation in December market was waiting for 9.5%, but increased 9.1%, which it means that producer inflation in China is decreasing. However, the CPI in January was not a good signal, but still it was lower than expectations. Generally, we can say with the data that we had today, we had to have the inflation numbers from British inflation numbers. We're gonna have the Canadian inflation number and some other European countries also, but Canadian and British inflation numbers they will be much more important today. What we're gonna have, what's important here, we can understand that yeah, in December we had inflation is decreasing, but in January again it's a little bit increased, which is not a good signal. Anyway, today in economic calendar we're going to have the inflation numbers from United Kingdom, and then in US season we're going to have the retail sales from United States, which is very 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 important, as I told, inflation numbers in Canada, and then later we're going to have the crude oil inventories, which that one also will be important. And finally at the end of evening we're going to have the FOMC meeting minutes. FOMC meeting minutes will be very very important and market changing. This is general what happened in the economic calendar. Let's say in the market, see this United States dollars, while inflation numbers were not that good, and the wars concerns is decreasing. So again, expecting tightening policies from Federal Reserve increasing. Therefore, the U.S. dollar still will be in a demand. We are not waiting to see the numbers lower than 96, so still US dollar will be in demand and it can increase even more. Gold also at least almost the same situation we have. Increasing 10 years bond deals cut a little bit limited the gold bulls here, and also the market risk also decreased. So gold demand is decreased a little bit, but in a longer time we can see that it is way above trend line and increasing. For the WTI or for oil market generally, and for energy market generally, and for oil, we can see that demand is increasing. Better than expected economic data means that economy is increasing. If we don't have supply and demand balance in the supply and demand, and the concerns around the globe, geopolitical concerns also is increasing. Therefore, we don't have strong signal to say that the oil should decrease. So therefore, in the midterm, still we are expecting to see the oil in the higher levels. For the gas, we are waiting for dollar to see the $4 for cent as a first resistance, and then for $1.70 as a next target. It is technically and fundamentally in a clear uptrend. US 500 and other US stocks, as we talked before, Zite movement with a little bit uptrend tendency, but the Zite movement for now it is still continuing. We don't have something to change the market. For the Bitcoin as well, for the Bitcoin also almost the same situation. We have 30K here and 34,600 US dollar as a higher band of this Zite movement. We need any movements up or down need to pass these areas, 40K in 40K lower or 44.6K higher to say that this next trend is started. For the Ethereum, we have these numbers between 3,000 and 3,400 as a Zite movement and trend changers above or lower that these levels. For the Ripple, we have 82 cents, which is right now we are trading on that. We have to see the stable. We have to see that above 82 cents stably. Then we can say that Ripple can increase more. For Euro USD Zite movements, GBP USD Zite movement, both of them are same as yesterday. Didn't change anything to these inflation numbers in United Kingdom. And retail sales United States can make the direction more clear. But anyway, we are waiting still to see for GBP USD. We are waiting to see the Zite movement with the downtrend tendency. For the Euro USD, still the Zite movement, not up, not downtrend tendency. Nothing. This is the overall what is the market, what's happening in the market and with the market situation. Hope it was useful for you guys. And if you have any idea or comments, please write under the videos. I will be back as soon as I can. See you guys tomorrow and take care. Bye.